Hi, Kristian Harris here from Hot Property Online. Today we're going to talk about mortgage rate wars and the lack thereof we're going to see this year. We're going to look at a quick case study for a AAA client and how the new mortgage rules are affecting them. And also, June 11th, Toronto Challenge, please sign up. Thank you very much. Hi, thank you for tuning in. Everyone's asking about how the mortgage rule changes are going to affect them down the road. And I have an example or a case study, if you will, of one of my clients. These clients are what we call AAA clients when it comes to income. I'll give you a little history of their properties. They have two residents. They have a principal resident in the city worth roughly $2 million. On that, they owe about $800,000 or so. They have another property worth $1 million, which is an investment property. And on that, they owe roughly $500,000. So they owe roughly $1.3 million on properties totaling $3 million value. They're looking to buy, let's keep the math simple, roughly $200,000 to increase their principal residence, to put in for renovations, just do it a little addition. So they're going to be improving their principal residence as far as the value, but let's keep the math simple. They're looking to basically have 1.5 outstanding of mortgages on properties worth about $3 million. And these clients are business for self, show good gross income. Like most business for self people, do not pay every dollar they make to them personally for tax purposes, so they leave some money in the corporation. They do pay themselves, they have excellent credit. In the past, these clients would have no problem pulling out $200,000 to improve their residence, per principal resident, and only owe essentially 50% of the value of your mortgage in value of your home in mortgages. However, new mortgage rule changes, these clients are having a very difficult time getting financing through a traditional bank, and so now instead of getting bank rates at 2.8%, they're going to be looking to borrow at roughly 3.8%. Now, historically 3.8% is not a bad rate, still very low. But to these clients, these AAA clients of mine, they don't understand why they can't borrow at the bank's 2.8 rate because they believe that they're a good risk for the bank, and they are, but these new mortgage rule changes don't allow the banks to assess risk or not. It's very black and white if the numbers work. So that's one example. If you have any questions of your situation, or you're planning a renovation project, or you're looking at doing something down the road, before you commit to that, make sure you give us a call and we do a thorough rundown of your situation to make sure that you'll understand the financing end of it, okay? Thank you very much. Well, as we sit here in February, one of the highest temperature days-wise in history in February, late February, we're going to obviously start to think about spring with this kind of weather out there. And in the mortgage world, in our world, spring usually means spring market for real estate. It usually means, in the last few years, the mortgage rate wars, as they call it, where the banks start to throw out these rates. I remember years ago it was $2.99, and the finance minister got involved, and we called them the rate wars. We kind of laughed at them because a lot of our lenders already had rates this low, but the banks make a special press announcement about it, and these rate wars are on. Don't expect to see that this year. A lot of the mortgage rule changes have kind of handcuffed what some lenders can do, and with the spreads being where they are, I just think a lot of institutions are not going to be looking to lower their rates anymore. So if you're hoping to get this nice real estate spring market, don't count on that in Toronto. And if you're hoping to get that coincide with mortgage rate wars, don't count on that this year. Thank you very much. Thank you for watching this week's show, Hot Property Online. As always, we love subscribers. If you're a first-time viewer and you want to follow us, please hit subscribe. If you want to reach us, you can tweet us, send us an email, give us a call. We'd be happy to answer any questions you have. Thank you very much.